what are some of the biggest myths that are out there, around credit, from, scoring models, or, ways to increase credit or remove items or whatever, just some things that, people need to be mindful of, that, hey, the kind of generally accepted explanation of this may or may not be what it actually is.
Yeah, absolutely. I always start off with paying a collection will drop credit scores. When you pay a collection off, not a charge off and collection are different. I'll get to that. But when you pay a collection off, it updates the date of last activity on a negative account, brings it to current, drops the credit scores because the algorithm thinks it's a new entry, right? Or a new item. We have a lot of lenders and even more realtors that are giving the advice of going out and just start paying things off because that's going to jump their scores up. In reality, that's not true. They're going to pay money to drop their credit scores. So that's one. A little bit of a ripple with that coming up, Phil, is that with medical collections as of July 1st, if they are paid, they do drop off the credit report. So that is the exception right now to that rule. We have a lot of people listening to Dave Ramsey that go out and they're cutting up credit cards, closing out auto loans, proactively doing these things. And there's multiple layers that I disagree with in this. Number one, when you close out a credit card, you're impacting multiple sections of the credit scoring algorithm. There's 5 different components that make up your credit score, and you're hurting 3 of them when you get rid of a credit card. And so when you close out credit cards, that's going to drop your scores. What you want to do is show responsible usage, right? We can trust ourselves with our own finances. We just need to get better at it. We need to understand what's going on, not play victim, because credit is something that can be a great tool for you. Credit is on your team. It's helping you double up what you have in the bank, or actually much more than that, right? Just by having good credit and having some money in the bank, you can qualify for hundreds of thousands of dollars. So credit's not a bad thing, and you definitely shouldn't close out credit cards. That's one. You get people going and thinking that, they get a big bonus, or they get tax returns, and they go and they start paying off things like a car loan or a student loan, right? Well, it all depends for me on if you're trying to do a financial transaction soon, like a big mortgage loan, because you wouldn't want to close any of those things out proactively, because that's going to mess with your history and your number of open accounts, and it will drop your scores.